Welcome back for another report on the gold market. During the past 3 daily sessions, including today, gold has performed its biggest sell-off since June. The precious metal has even retreated below 2,000 US dollars at the moment, and the correction lower sparks further interest for gold traders as the upward momentum forward in the past 9 consecutive weeks seems to be put to the test. Whether this is a sign of a significant change in general economic sentiment or this is just a gold price normal correction is what we will be discussing in this report. Also, we aim to look into general factors that could affect gold's price in the next days or so, while we aim to be introducing our own opinion at the same time. Starting first with the USD, which is the major counterpart for gold, the currency saw a minor lift in the past days after the US employment report released on the past Friday indicated the unemployment rate had dropped to 10.2%, which is lower than most analysts expected. The report also showed that more jobs than initially forecasted were created, which implies the economy is recovering slightly faster than anticipated. Gold immediately turned bearish after the report was released, and the momentum continues until today. We would suggest that if any other evidence that the US economy is recovering faster than expected is released, then gold's price could have a similar reaction, as it would confirm that the economic circumstances in the largest economy of the world are improving substantially. On the other hand, the employment report in the US has always been a strong metric for the economy, and other upcoming financial releases from the US in the next days will need to match that impact to create a similar reaction. From our point of view, the most important US financial data in the current week are two. First, on the 12th of August, we get the US inflation data for July, which is considered among the top economic indicators for an economy and could move gold's price substantially upon the release. Second, in our view, are the US retail sales released on the 14th of August, along with the industrial production rate for July and the preliminary University of Michigan sentiment for August. On the 13th of August, we also note the weekly initial jobless claims that is usually being monitored by many traders also. Furthermore, some measures taken by the White House to support the US economy may have had a negative impact on gold's prices. Like, for example, the extension of the unemployment benefits to US citizens may have removed some risks, as the economy is evidently improving at the same time. Moreover, gold traders may turn their attention towards the ongoing US Sino tensions, as the Met has continuously updated with the retaliations from each side. Some of the latest measures taken by the US include labeling goods produced in Hong Kong as made in China, that will be implemented on the 25th of September. It is said that the specific products will be added to the list of goods with trade tariffs similar to the ones imported from the Chinese mainland. The reason behind this move is probably China's relation or even ownership of the production of these goods in Hong Kong. On the other hand, China lately imposed sanctions on a number of US politicians that belong to the Republican Party. The tit-for-tat measures imposed by both the countries seem to strengthen the resentment of the two sides against each other, and in our opinion, things are continuously becoming worse. In our view, anything related to the subject that is unexpected tends to affect gold's price, and gold traders should keep an eye on developments related to the matter. Moving now to the technical analysis and gold's 4-hour chart. Gold is currently trading between the R1 1990 resistance level and the 1970 support level. If the current sell-off is to persist, then the S1 line could be breached, opening the way for the S2 1950 line to become a target. Even lower, we have set the S3 1930 hurdle as a level to be reached if the sell-off is to continue in the following days. In the opposite direction, the 1990 resistance level could be considered the first target if a rebound is to surface. Higher, we have also noted the R2 2005 line as the next possible stop. However, if the buying momentum is strong enough, then the R3 2020 level could also be reapproached. In any case, we would like to note the sideways motion that the precious metal performed from the 31st of July to the 4th of August, as it may be taken into consideration by traders. Please note that the RSI indicator below our 4-hour chart has run across the 30 level, possibly confirming that the bearish trend formed in the latest sessions is currently in its prime. That should sum it up for today. From all of us here at IronFX, best wishes for solid trading.